Welcome to Decoding the Childcare Business. My name is Zuleika Hines, your host, and I'm so glad you're here. On the last episode, we had a great discussion about the landmines that are around the corner for your business and how to look at them in a way that you're aware what they are and how to think about it strategically so you can find tools and ways to overcome it. In this episode, we're going to discuss how these landmines can be dismantled in a way that you can have the strategy and the know-how to overcome them. Welcome to Decoding the Childcare Business. I'm so glad you're here with us. I want to thank you for liking and subscribing the video, as well as joining the channel. I am so glad and thankful to many of you that have joined me on our website at www.beyondbasiclearning.com. By now, you have seen a lot of our reels promoting your child care intelligence system. This is a tool that has not been done before. It includes all 52 jurisdictions. That means it has all 50 states, including Washington, D.C. and Puerto Rico. You can come into this website and use this tool and be able to find out what child care programs exist at a particular zip code. You can find out if there's group family daycares in that zip code, family daycares in that zip code, how close they are to your house or how close they are to a location that you're interested in building or establishing your business in. What is great about this tool is that it would also help you identify the amount of square footage that you need for your home or for a school. So let's say you want to go and look for a center-based program, a location to build a school at a ground level or a commercial space. How much square footage should you build? How much room should you have? So thank you for joining that community. Let's keep going. An important disclaimer: the information provided in this presentation is for educational and informational purposes only. It does not constitute financial, legal, or tax advice. Please consult with a licensed financial planner, CPA, or attorney before making any financial decisions regarding your business, real estate, or investment. And as I always say, an investment in knowledge pays the best interest. What are the 5 landmines that we must protect against? Last episode, we discussed that underestimating what it really costs to open is huge. So many people spend all this money and don't even open their doors. And that is something we're going to delve deeper in this episode. Not knowing the true cost of labor, operating without the right legal shield, the insurance crisis that you're not prepared for, and running your business on a handshake and hope. All those 5 landmines were discussed in our prior episode, and knowing the landmines is not enough. Today, we're building the 5 shields that makes your business bulletproof. This is how you protect your wealth and your legacy. We're also going to have a free download to the free protection checklist in the description below. So don't forget to like and subscribe so you can get access to this information. Now let's get right into it. Structure your business like a fortress. Oh my goodness. There are different formations. We touched on the LLC formation on the last episode, which separates your personal assets from your business liability, which is the first wall of defense. But guess what, folks? There's more. You just don't form an LLC, step away and say, oh, that's it, Ms. Zuleika, I have the LLC, I have an S-Corp. That's not all. You have to have an operating agreement. It defines ownership roles, profit distribution, and is essential for a single member or a dual member LLC. Let me tell you how important is an operating agreement. The operating agreement also dictates if the partners can borrow a loan with permission or without permission. The LLC operating agreements will define if a partner is able to receive income from the operation or they only receive capital gains when the business is sold. The LLC also defines that, God forbid, something happened to you or your partner, where does the LLC go? Does it go to a trust or does it go to the other partner? Does it go to your family members? The LLC can also have, the operating agreement also has first right of refusal. If you have 1 or 2 partners and one of them dies or is incapacitated, there's the right of refusal, meaning that the partner has the first right to buy the shares of the partner. Therefore, they become the sole owner of the business. You see now why operating agreement is so important and why the LLC formation is just the first layer? There's other layers as well. The LLC requires an employer identification number. Many people go ahead and get an LLC, and guess what? They forget to get their EIN number. That's one of the most important things. The EIN number is your tax ID number. It's the social security of the business. It's what allows you to open bank accounts, establish credit, provide legitimacy to your business. It is what makes you let's say, open for opportunities like grants and loans and contracts and partnerships. So you must not only just get the LLC, you must also get that EIN number. It also allows you to create a separate bank account, which allows you to separate your expenses, and you're not commingling with your personal. It separates it to your business. And in this way, you can keep it isolated to that. One other thing that many people don't speak on is that LLC, depending on what state that you're in, requires it to be published in the newspaper, usually for 3 months or 6 months, depending on what your state requirement is. You must know that, because if that publishing does not take place, guess what, folks? You can have your LLC, your operating agreement, and your tax ID, but your LLC is not considered to be fully vested. So be sure to get your LLC fully vested by taking the steps. Setting up an LLC is only the first step, like I shared with you. Maintaining separation between your personal and your business, creating a credit card for your business will help you have that LLC as a separate business entity and treat it like one. This way, it has its own life, its own expenses, its own billing, and it'll make life so much easier for you when you do your taxes. Shield number 2, insurance isn't cost, it's a weapon. Insurance is so important, but it's just not just any insurance, it's the right insurance. When I had the right insurance for my business and I had a commercial space in Brooklyn, the apartment upstairs had a leak, their pipes busted, and the water came right into my space. But guess what? Insurance covered me for business interruption. They went ahead and sent in a remediator that took away all the humidity out of the space, which allowed for the place to dry in the right way and no mold to come from that. So it is important for you to get the right insurance. You will need to get general liability insurance, protects against bodily injury or property damage claims. You will need property insurance, covers your building equipment and curriculum materials. You'll need workers' compensation. Not all the states mandate workers' compensation. When you go into my tools at the Child Care Intelligence System on my website, it will tell you if your state requires worker compensation or not. So that's why the Child Care Intelligence tool is so important, because I already built many of these concerns into the pricing model. You're going to need professional liability insurance against claim of mismanagement or negligence, and that's really key. You're going to need an umbrella policy. So shop around. Make sure you know what your policies is. Make sure you know how much is increasing year over year so you get the right policy for you. Then document everything. Incident reports, compliance, mitigate liability claims. Be proactive. 36% of providers that have the coverage decreased or limited in 2024. Don't wait for a crisis. Make sure that you stay ahead of it. Be prepared so that way you don't fall into danger. So don't be one of those providers where your coverage is limited or decreased because you were negligent by not having the right parts in place to protect you, especially if you're working with children and staff and families. You want to be properly protected. Shield number 3, build financial guardrails before you need them. I shared with you that if you already know this is the path that you want to take, start paying your phone bill ahead of time. I had my Verizon bill paid for my business paid ahead of time, my utility bill. I will pay an extra $100, an extra $200. And when the summer enrollment drop, I used that money to mitigate some of my expenses. Have an emergency fund. You can build it by prepaying some of your bills. Have a whole life insurance policy because it allows you to develop a cash. And that cash that grows inside a whole life policy would allow you to become your own bank. And you can access the capital in 24 hours. Certain insurance companies like Northwestern will allow you to take out your cash value within 24 hours. They will fund your account through a wire transfer. There's other companies like Forrester that take you about a week to get your cash, but at least the process is there for you to get it. So you want to make sure you shop around, find out how you can maximize your cash policy so you can leverage that in case of an emergency. It doesn't go against your credit. It doesn't require you to refinance. And so the interest rate is fairly decent. So it's definitely lower than a credit card interest rate. And it's something that you want to have in place sooner rather than later. Your whole life insurance policy will never be as cheap as it is today because the older you get, the more expensive it gets. Tax savings and variable rates. Grants are taxable. Build cushion for variable interest rates. So if you know you're getting a grant and you're going to be taxed on that, talk to your accountant, your financial planner. mitigate a portion of that to taxes. It's not free money, folks. You still got to pay Uncle Sam. If you have variable interest rate and the interest rate goes up, guess what? Your minimum payment for that mortgage or for that loan goes up. I remember during the 2008 market crash, I had a variable interest rate for the SBA loan, and the loans started creeping up. The payment went from like $3,000 one month to $5,000 the next month, just because the interest went up that fast. But to my credit, I had prepaid my business loan, and I only had a few more months to go. So if you go ahead and prepay any variable interest rate, that is it's a big ticket item, or try to convert it into a fixed loan payment with a fixed interest rate that you can manage this regardless of whether the interest rate goes up and down. You can stay ahead of these issues and be effective at mitigating the landmine and have an excellent shield for situations such as this. Monthly financial review. It's going to be hard to do monthly financial review, but with AI and ChatGPT, it has come to be a lot easier. Leverage these tools. Understand what your expenses are. Understand if that month you had a one-off, meaning you had to pay a deposit for insurance, but then it normalizes for the next 6 months, or you had to make a major purchase like equipment, a crib, a table broke, a chair, outdoor equipment. All of those are one-time costs, but then they normalize, meaning you don't have them again. So you can better budget. Think about how you can do that so you can be ahead of it and have a way to mitigate it. If you had a whole life insurance policy, you could borrow against your whole life insurance policy for those big ticket items. And then your payment would be definitely a lot less than your credit card. And you can preserve cash, meaning you can pay yourself back as fast as you can. But if it comes to the summer months, you want to slow it down, you can do that and then pick it up in September when enrollment is better. You understand what I'm saying? So let's say you are looking at your monthly review and you got to buy cribs for your enrollment, but you don't want to draw down on your cash because you also have payroll. If you had a cash policy, you can borrow against your cash policy to buy that equipment. But guess what? You can pay yourself back as fast or as slow as you want. And by doing that, it gives you more control of how you pay back that loan. You want to pay back the cash that you borrowed because you may want to use it again to resolve another matter that will come up later on. The key is that you have the control of when and how much to pay. So if the summer time comes and your cash is low, you can say, well, these 2 months I'm not going to pay. But when September comes, you double up so you can have the money again to mitigate another emergency or equipment purchase. And that's what people mean by becoming your own bank. The ultimate truth, the providers who survive downturns are the ones that planned for them. So we discussed whole life policy and HELOCs in episode number 19 and 20. Go back, review that so you get a greater understanding of what I'm talking about when it comes to becoming your own bank. I'm also going to bring a financial planner to speak to us so you can get more information on what they do and how they look at a prospective customer. There's a lot happening here. Please don't forget to like and subscribe below. Stay connected. Give me your thumbs up. Also, don't forget to visit my website at www.beyondbasiclearning.com, where I am hosting the tool, the Childcare Intelligence System, that allows you to create a budget based on our industry, not a budget based on insurance or rentals or restaurant. This is based on our industry, so you can plan correctly. So don't forget to like, subscribe, and join the community on our website. Shield number 5, compliance isn't bureaucracy, it's your defense. Don't be afraid of getting a binder and putting all your documents in a binder. Don't forget to get your licensing requirements together. Know your state regulations cold. Aim to exceed the minimums. My goal was always to know my regulations inside and out. I pride myself with that. It was so important that one year I had a new inspector come to my school, not understanding that my program was infants and toddlers, not preschool, and I had a different licensing requirement. This person, not understanding the difference between infant, toddler, and preschool, was already ready to say that I had too many children in a classroom that had already been approved months earlier. Because I knew my licensing requirement and my licensing guidelines, it did not hold, and I was able to continue running without a blemish to my name. Know your licensing requirements, and don't be afraid to stand up for yourself. Not everyone is expert in our business, but you must become an expert in your licensing requirements for your state. Staff to child ratios. Never cut corners. I always prided myself to be below staff-to-child ratio because if a staff called out or a personal day, I had someone else to be there to step up. Now, when you go to the
Introducing the
childcare
Childcare
intelligence tool,
Intelligence
the
System,
childcare intelligence
built
tool
by
will tell you what
Zuleika
is the
Hines,
minimum
a
age
woman
group
who spent
per
decades
classroom
building,
and how are their
growing, and
ratios
expanding
maintained.
for
This
childcare
tool will
programs.
let you know
She didn't
what your
just
state
study this
requirement is, what
industry,
is your child
she
teacher
lived it.
ratio,
And
what is
now
your
she's
square
built the
footage
only tool
requirement.
designed
All that
specifically for
information can
any
be found
aspiring
on the
childcare
childcare
operator or owner
intelligence
that
tool.
wants to build,
Health and
grow,
safety
and
documentation is
expand their own
paramount.
childcare
Put it in
business.
your calendar
Whether
with a
you're a
reminder a month
developer,
ahead,
a
2 weeks ahead,
community-based
so
organization,
you know when
or an
CPR
individual
training is
ready
coming
to
into
make your
play,
mark in
when
this
you have to be
industry,
able to
this is
recertify
for you.
for a food handler
Here's what the
certificate or for
Childcare Intelligence
serving
System
meals.
does for
Make sure
you.
you know
You
who
enter a
they are.
location.
Don't just depend on one teacher. I never did infant toddler CPR for one teacher. I was always afraid that the teacher could be out or absent, and then what? Then what do you do, right? So in Brooklyn, we also needed to know how to administer an EpiPen. All of those things are critical and important. Make sure that you double up, triple up, quadruple up. And if you can't have your whole staff, like I did, train on health and safety documentation. Emergency drills are nothing to sneeze at. My children were so accustomed to emergency drills that when we had a real emergency with the pipes and all the water flooding our infant room, the kids did not cry. They were so used to having fire drills at different times of the days, at different times of the year, winter, summer, fall. We consistently did our fire drills. And that allowed the children to understand how to function, how to navigate it, and what to expect. It reduced the cries and the anxieties and feeling overwhelmed. We did fire drills with parents at the school. It didn't matter. Fire drills needed to happen every single time. So every teacher at any moment, whether it's morning teacher, your afternoon teacher, your transitional teacher, your substitute teacher, all knew what to do. The ultimate defense compliance is not just about passing inspections. It is the armor that protects your business, your assets, and your reputation when things go wrong. When a regulator or lawyer comes knocking, your documentation is your defense. I had a binder with tabs for all of these requirements, the licensing, the staff-to-child ratio, the health and safety document, the emergency drills. I even had my teachers understand how to read the licensing requirements. I felt the more people understood what requirements we had, the better we were to stay compliant. Everybody was accountable to stay at ratio or below ratio. I was willing to pay for lunch. I was willing to pay the overtime, but over ratio was not the option at all. Wealth is your ultimate protection. The 3-pillar recaps of 13, 14, and 20 were done in those episodes. So go back to those episodes 13, 14, and 20 to understand how we broke down the wealth as your protection. But the business active income, your daycare operations generate the cash flow needed to fund the other pillars. It is the engine of your wealth building strategy. The real estate, we talk about tangible asset, how you can own a home. Owning a property where your business operates means that you're building equity, not just paying a landlord. This is the sweet spot. And that's why if you go back to those episodes, we unpack what these sweet spots were. So you understand that you can buy a childcare business through an SBA loan. As a matter of fact, you can buy an existing childcare business using an SBA loan without having any experience. But the loan will look at your credit, will look at your profile and make that determination. I had a conversation today with a lady that's looking to sell her business. And she said to me, I thought that the SBA loans were not for people who were under 1 year. I'm like, yes, that may be so. However, if you're already an existing business, the SBA loan will look at that differently. So do not say no to yourself. Go out, inquire, ask the questions. Go to the library. They have SBA sponsor mentorship like SCORE. Go to an SBA meeting. Join the Chamber of Commerce. They have contacts with SBA lending officers. All these individuals can support you in this journey. Life insurance is your liquid shield, is your self-bag. But not just any life insurance, it's the cash value whole life insurance that allows you to become your own bag. So if you get a term policy, it's like renting a car. It has a specific purpose for a specific time. A whole life policy, that's the way to go. I'm telling you, you definitely want to listen to the episode on whole life policy coming to you soon. Now break the chains. True protection isn't just about avoiding a loss. It's about building an unshakable foundation of generational wealth. You are building wealth while building a business. That is how daycare operators can break the chain of poverty. By owning your own real estate, understanding what that real estate is, and being able to take advantage of the funding available that encourage childcare businesses to go to them for funding. Let me tell you, childcare business done well can be very profitable. We stay in our location 10, 15, 20 years. Who wouldn't want us? We bring families to the community. We bring children to the community. We bring people that stay 5, 7, 10 years, even longer. So childcare done well, done right, is not only good business, it's good for the community. Don't forget that. I want to thank you all for watching, for being part of this episode with me. You now have the armor. We talked about landmines. Now we're talking about shields. Next, we're going to talk about the childcare intelligence system and the tool to help you budget and plan. And in July and August, we're bringing guests. We're going to be bringing guests to speak to you about various ways for you to become stronger and ways for you to fulfill your dream of building your own childcare business. Don't forget to like and subscribe. Don't forget to sign up for the child intelligence system tool that is on our website, www.beyondbasiclearning.com. Folks, that has all that information. You can, if you're looking to move to North Carolina, you're looking to move to South Florida, you're looking to go to Texas, the childcare intelligence tool has all of those areas in one database. It will tell you the square footage, map out the locations where the childcare businesses are. It will build a budget for you. So you want to go ahead and join the childcare intelligence system community. My name is Zuleika Hines, your host at Decoding the Childcare Business. Thank you for joining in this episode, and I cannot wait to meet you. Thank you.